Welcome to TheoTrade. This is Don Kaufman. December 16th, 2020. Minutes to go to the cash close here on this Wednesday afternoon. The marketplace, it's just all bull and no bear. Of course, you can take that title any way you want, but yeah, the origin of that title really comes from some of the comments from the Fed Chair Powell. Of course, after today's FOMC announcement, and of course, our favorite comment from the Fed chair. Of course, he says he's not concerned about equity valuations. Although PEs are high, equity risk premium is not concerning. No red flags on asset prices. Yeah, that was the origin, of course, of today's title. But let's actually break down the markets. As I said, there's minutes to go to the cash close. One of the first things that I want to point out, you might look at the S&Ps, okay, after the close. All right, they're up 10. The Nasdaq, once again, on fire. I mean, it hit, all right, 12,700 and change today. Just on fire here. All of a sudden, though, if you cruise over to the advanced decline line, okay, you would see that it is negative at this point. There we go. It's fairly decisive with minutes to go again to the cash close here. So we're sitting with a negative advanced decline line, and this assumption, again, the marketplace, it's infallible. It just continues to go up. But again, we're playing a little bit of the rotation game that we've seen a tremendous amount. And speaking of tremendous amount, it looks like almost like the Nasdaq may see some sell side activity into the cash close here. We'll stand by on that one in the next 2 minutes. Nevertheless, as I was saying, it's a little bit of the rotation game again. One of the things I've pointed out in a lot of sessions recently is that you should look heavily at the financials, because the financials really, it was this enormous bid in the month of November, okay, that got some of the lofty valuations for the broader S&P. Right, the Nasdaq is its own animal, there's no question about that, but when it comes to the S&Ps, okay, it's the financials that got us there, and they have completely stalled out in recent weeks. And again, they've looked like they were going to roll over. In fact, I am carrying a multitude of bearish positions inside of the financials. I do want to clarify and quantify the types of positions that I am using. Number one, I'm just outright short, okay, some of the financials themselves. It was just a short position in one account of about 1,000 shares, okay. In addition to that, I'm actually using a duration, okay, in the money put. And this is an in the money put. In the money put is a synthetic short stock position. So not only am I saying, yeah, I think the financials are going to roll over, okay, but of course I am short those financials, and today they are rather flat. And that's actually one of the things I wanted to point out, because it's holding back the S&Ps, right? Net, what is driving trade today? First of all, you have to look at something like Microsoft, which just literally has not moved at all. And I've been saying this, kind of day in and day out. So the entire rally, again, that and the most recent rally, I should say, was in very large part in the S&Ps, brought to you by the financials. It was brought to you by the energy sector, okay? The monsters of tech haven't really done anything. And when I say we're kind of playing a little bit of the rotation game, all of a sudden, listen, this is an underlying here, Microsoft, that nobody has looked at twice, okay, in months. All of a sudden is bid by the tune of about $5, or there's the closing bell. It's bid by about $5 or 2.3%. Amazon taking off to the upside. Again, nobody has looked at Amazon in weeks. This thing hasn't done anything since its last earnings announcement. It sold off, a little bit of a bid, flattened out, okay, and net. This is the kind of trade, though, that we've seen is, it's a little bit of whack-a-mole. You push down Tesla, right? So you push down Tesla and whack it on the head. All of a sudden, Amazon pops up, Microsoft pops up. That's the kind of marketplace effectively we've seen. I would read nothing into today's kind of cash close. The S&Ps, this is drifting at 0.2%. You just simply do not read into that. What I would do, though, okay, is keep in mind the extensive expected move, okay, for the remainder of this week. And the remainder of this week, of course, is what? It's only this Thursday and Friday of trade. But I will remind everybody that the expected move this week, it is plus 86, okay, or minus 86. And this is where I just wanted to spend a few moments because, here we are. We have absolutely, okay, kind of ground to the upside in the marketplace. We're about halfway home, so we've moved up about 40 handles. So of that 86 points, higher or lower, we've moved up approximately just north of about 40 handles over here. We're more than a hop, skip, and a jump, though, away from the upper edge. Again, the upper edge of the expected move. That upper edge of the expected move is somewhere around 37, okay, 45. Lower edge of the expected move is all the way down to like 35, 75. And the point that I want to make with this, we've seen this movie a lot in some of the recent weeks. If you look at last week, we absolutely sputtered, did nothing, a little bit of a move, of course, on Wednesday, and took that shot on Friday at the lower edge of the expected move. The prior week, kind of sputtered, did nothing until Friday, until we actually hit the upper edge of the expected move. Prior week, we shot up pretty much on Tuesday, rode the upper edge of the expected move. So once again, this trading week, right? And again, from a probability point of view, this trading week ends at the upper end or lower edge of the expected move. Okay, is that definitive? No, but it's an incredibly high probability that we at least tag, okay, the upper end or lower edge of the expected move. And that's something that, you need to keep in your mind at all times, especially for risk management, but also in trying to position yourself in this marketplace. It could be a little bit of futility if you're unaware that you could be stepping into, once again, a fairly substantial move. If you look where we are, literally right now, we're at 3,700 in the SPX on the button. 3,700 on the button. The upper edge of the expected move is 3,745. Okay, you have 45 handle move that has to occur to actually tag that. To the downside, people, that would just be an outright fierce move at this point to 35.75. Yeah, subtract 100 points here or there. We're all friends here. But again, the S&Ps, as I said, I wouldn't read anything into the veritable slop fest over here. There is a couple things, though, that are a little bit disturbing that I want to point out. One of them, which is Amazon ripping to the upside. Why is that disturbing? Retail sales numbers came out today for November. Okay, they were minus 1.1%, which was considerably below estimates. And I find it ironic when most of your retail firms bid to the upside. I know it's not a retailer, okay? Today it's going to be a cloud company and tomorrow it'll be a retailer. But most of your retailers didn't per se have a reaction. Negligible if anything here. You look at something like Target, okay? It's kind of a moot point. And a lot of the economic data, once again, is falling on deaf ears, okay? The vaccine, right? This is what we kind of call in here in terms of the vaccine. If you take a quick glance over at Pfizer, this is another position that I wanted to talk about. When I say falling on deaf ears, this is, buy the rumors of the vaccine and sell the delivery, okay? This is an absolutely hideous and wicked move inside of Pfizer. And yet at the same time, if you look at mRNA, okay, you've still got a fairly considerable bid. A little bit of a drop over here, but again, I would keep eyes on these for the time being. Those of you that are looking for that vaccine play, or looking really at any of the biotech companies that may have something coming out, a lot can be learned, obviously, from this. Almost like a buy the rumor, sell the news kind of price action. All right. Kind of moving on in here, I want to take a look again at a few of the expected moves on the week. This is something I was talking a little bit about on Monday because there were considerable moves. The financials, pretty much on their central move of the week. There is huge room for movement on this week. That's the only point to be taken from looking at the financials, from looking at what? Okay, the SPX, the QQQ. The QQQ is actually sitting at its upper edge of the expected move. So again, the S&Ps, not a mover. The QQQ ripping it up. the IWM, okay, also tearing it up, literally sitting at the upper edge of the expected move. So question is, what will drive the S&Ps, okay, to the upper or lower edge of the expected move? Once again, I believe that's actually going to be the financials, predominantly why I'm actually showing it to you. Again, look for some substantial moves on Thursday or Friday of this week. Last thing I want to mention here this evening, Tesla, okay? Tesla's being added officially, okay, to the S&P 500. Everybody is aware of it. But one of the things that you may not be aware of is that this is very likely to crush, okay, Tesla's implied volatility down. And in fact, we're seeing some of that. If you take a look at the implied volatility range, it has definitely subsided. The other aspect that I think should resonate with you is I often sell premium inside of Tesla. Okay. And if you take a look and bear with me here, we're 15 days out. I just want to show you I sold and sold naked. Okay. Just a one lot out here to make a quick point. This is a one lot that I sold on Monday in Tesla. I was capable of selling it for $4.25. Now, I actually sold a call. That call has actually produced what? Well, right now the call is actually worth about 90 cents. So for the most part, what? 3/4 of the premium. 3/4 of the premium has already, it's actually more than that, but 3/4 of the premium has basically come out of the call that I sold, right? What has the stock done since, okay, that Monday kind of time frame? You take a look at this and the answer is absolutely nothing. All right, from where I actually sold that call, the stock has not actually moved down. It was down today. Nevertheless, I sold that call when the stock was trading very close to here. So what are we learning? Okay, the implied volatility is starting to get sucked out again of Tesla. Premium sellers, beware. Beware, because again, just the other day when I sold this thing, all right, those calls, that implied volatility was jacked up substantially higher than that. It's down to about 95%. Yep, a little bit of the party is over, at least for the time being, inside of Tesla. I want to thank everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.